What's going on, guys? It's Goose from the Wise Wealth Discord coming back at you with another watch list. Just wanted to go over some of the levels we're looking at. I'm aware that we have been selling off quite a bit. Sentiment kind of needs to change in order for that to change as well. It's not all just, fundamental and technical based. Sometimes sentiment and just people being scared matters too. Tuesday we got Jolt's job openings. That'll be pretty big red folder news. Core CPI. Jimmy's been forecasting that. Could potentially be a bullish catalyst. We don't know exactly what it's going to come out at, but as of right now, it looks like they're forecasting for year over year 2.9 is their forecast. So hopefully it comes in within the twos. If it's a 2.5, 2.3, that would be a pretty bullish catalyst in my opinion, because people want to see and make sure that inflation is coming down if job market is starting to slow down too. PPI unemployment claims Thursday, and then consumer sentiment Friday. Consumer sentiment has actually been starting to move the market a little bit more than I remember it to. So keep an eye on that when that does come out on Friday. Those look like just the few red folder news that are coming this week. We have SPY continuing to do its downfall. We have lost the 200-day moving average. It's actually pretty concerning. Usually there's a big retest. I'm not saying we're not going to break these lows of 566 and make a lower low. Usually there's a pretty giant retest coming back into it, so we'll see if we slow down here at least. Right now there are quite a bit of divergences, just like last week. They can go on for a few weeks, as I was saying. Eventually, the momentum wanes and there is, a counter rally. But that's kind of hard to predict, and there's a lot of people on YouTube, buy the dip, this is it, here comes the major rally. I'm kind of leaning on that side, to be honest. I do think we're due for like a decent rally, whether it be like 2%, 3%, a couple days, to wash up some of the bears and then ultimately send us lower. But we don't have to do that, is the thing. We could go for, 2-3% lower down in this 545 range before we get that first bounce. But there's lots of levels of confluence that I've been watching, especially like this level right here, the 563, 564 on SPY. We got pretty close on Friday, but never quite got that low. Bounced up from there, got on top of the wedge, and got denied. Now in pre-market, we're down like 1%. So there's still some fear out there. We're down below the 200-day moving average. You got to get above that at the very minimum. QQQ, same thing. You could tell it's kind of the line in the sand. It was holding the 200, lost it, came back, retested it, and we're selling back off. So you got to get above at least 492, 493 in order to have some substance. And then this ultimate trend right here, the break would be around 496, 497. You get into those areas, then you could start to work your way up, hopefully, to the 50-day moving average. But things do look kind of bad. I mean, typically, if you go to the weekly, we don't have much more than 3 weeks of selling in a row. But these are pretty big bodied candles, so we could get that fourth week potentially. But usually, if you look at historical trends, like it's usually 3 weeks, 1, 2, 3, 1, 2, 3, 1, 2. And that's what resulted in our last correction that we had. This was 4 weeks technically, but you had a bullish hammer, so a huge recovery towards the end. 1, 2, 3, then green. 1, 2, 3, green. This was a crazy time. This is when the bear market started. 1, 2, 3, 4, 5, 6, 7. 7 weeks in a row of red. Man, that must have been a tough time in April of 2022. But I'm just showing you historical trends because it's like these red weeks do happen, and then we had this gap down on this the yen carry trade, and we ended up getting bought back up. We'll have to see how it does play out. I mean, I can't tell you exactly, but I'd assume that there's some sort of bullish candle in here, whether we get that bullish hammer or we have like a bullish engulfing that forms. We'll see how it plays out, but 3 red candles in a row. Usually there is a green week here or there, but like I said last week, his divergences and stuff can continue to keep going. We're slowing down in momentum. It's not a huge divergence, but it for sure is starting to build higher highs, higher lows, as you can clearly see that we're coming down. We're creating higher lows, higher highs, or higher lows, higher highs. On the RSI we are, but on the regular chart we're just doing lower highs, lower lows, and continuing lower. It's a pretty steep incline. That's why everyone's kind of like looking like this is like one of the strongest bull markets. Everyone always bought the dip. Why has it not happened? People are very confused. They don't know what's going to happen with policies and Trump and how they're looking at it and what tariffs are going to come out. So when you have uncertainty and you're scared and you don't know exactly what to expect for the future, usually Wall Street likes to sell that kind of stuff. They don't like to hold on and be unsure and be unaware and not think that the economy is going to grow. You can see in the 10-year, it's been coming down drastically. That's usually a sign of like what they expect growth to be. If you expect the economy to be great, then you're going to want a higher yield, so yields end up going up. But ultimately, we're still in a downtrend, so we can't get super bullish as much as I would like to be and be like, oh, this is the bottom for sure. You don't know. So always just pay attention to what the previous lows are. 482 will be the next level lower if we do break below that. IWM, you want to hold the 202 mark. You lose that, you're just going down, down, down. Getting that 50 to cross over the 200 wouldn't be a good thing. I think they call that the death cross. I'm not exactly sure. Or it's the, yeah, I think it's the 200 capturing the 50. So we'll see. It's getting closer. Still pretty ugly. It's starting to verge a little bit more. But ultimately, you are in a downtrend. You have that consolidation, another leg lower. So it's like we're either going to consolidate here or we actually get a sustainable, tradable rally. I think it could happen. It's possible. You see that Bitcoin is trying to hold their 200-day moving average. Now, if Bitcoin starts to turn up into the 90,000 range, maybe even 95 to go test this 50-day moving average, that actually explains, some of the things like risk-on sentiment. So when I say sentiment's not there, you see Bitcoin sound off because people are scared. People are selling rips. And when that time does change and people start to become bullish and a little bit more certain about things, you'll see Bitcoin start to rise. And once Bitcoin rises, then you could start to see certain companies like Apple, Microsoft, the tech more in general. I mean, you're obviously going to see the smaller caps take some hits as well if Bitcoin isn't performing well. But in general, a risk-on sentiment indicator is cryptocurrency. If you're buying cryptos in this environment, then obviously you think that, there's going to be growth and stuff to that nature. So be watching Bitcoin just for like the risk on. If that does have a day or two of a good rally, I would assume that the stock market follows behind. But a lot of levels to watch out for, like Apple came into this level and was bought up pretty well. It honestly doesn't look terrible, but it could just be a huge bear flag from that big sell-off because they did create that higher high. They created a higher high, higher low, higher high, barely, higher low. So it's like, are they going to go create that higher high, get above the 50-day moving average? That's what I'm hoping for. I do hope there is a bullish relief at some point. I did start accumulating some NVIDIA calls for April 17th. So we'll see how those play out. I mean, if I do end up losing, my $700-800, that's okay. It's a managed risk trade. But I'm assuming it would be really odd not to see like some bullish momentum going into the end of March. Like toward maybe this week could be, bearish again, but it's going to get overstretched at some point. I'm assuming there's going to be a bounce. This one isn't diverged as hard on NVIDIA, but what I liked is just the PE. The PE at this level is cheaper than Apple, and Apple isn't really growing nearly as much. Like I'm pretty sure NVIDIA is close to like a 70% growth rate, and Apple's maybe like 8 or something like that. So it's like they're not growing nearly as much. So that's what's shocking about their yield is how cheap they can be. But clearly below their 200-day moving average, clearly below their 50. So nothing really good happens when you get below these major moving averages. So in order to be like ultimately bullish, you're going to want to see above some of those levels. and you want to build out like a nice base, like come up, retest this, but don't lose that 113 area. And it's like right now we're at 109.77, so we're right around here trying to go for another leg lower. If it does continue down, there's really not much holding it up other than like the 100 area. The 100 area is going to be a big level of confluence that hopefully you do get that bounce and then start to move up there. But we don't, as traders, we don't move off hopefuls. I understand that I have a certain bias when I go into every week, but I'm well aware and receptive to the fact that it may not go in my favor, and I may have to change my tune. And if things get below the 107 area, then that's when you start to possibly short. I caught a lot of shorts last week, as well as a couple longs in the morning, but when things are like this and a lot of uncertainty, 9 times out of 10 they're going to sell first and then ask questions later. So you don't. You do want to be buying like in the long term. Options and buying long term stocks are two totally different things and approaches. So when Apple gets or Tesla gets down here, and you're thinking it is going to be a profitable company, it's going to continue to innovate in the future, then these are some of the best discounts you can find when you do find a Mag 7 stock below their 200-day moving average. You find NVIDIA below their 200-day moving average, because that doesn't always happen a lot. But you want to see some sustainability with the basing of it. Like you want to see a base and then maybe a higher high to like confirm that it's bullish, because we can keep dropping. Who knows if the Q's, continues to keep going and we go for this 413 level or 430 level. If that happens, Tesla's going to be a lot cheaper and NVIDIA will be a lot cheaper, but you don't know if this could be the bottom as well. So that's why it's like I always say, just DCA, find your spots. When you feel like it's oversold, and buy some more there. If it goes for another leg lower, buy some more there, because eventually there will be a bottom floor. It's most likely not going to go touch the 40. Yes, barring any major crash that could happen, but I don't think that's going to happen personally. I don't think we're due for a bear market just yet. You could tell that these companies aren't fundamentally being sold off. Their earnings are still great. NVIDIA had like a 70% quarter or something like that of growth. But there's a lot of scare, and the technicals show it. I mean, Google right here, they lose their 200. They can't get above it. And now we're selling off. You can see there's a big sell-off. So below 167, that matters. AMD still in the toilet. Broke that huge trend. Below 95. Meta, we came back. We tried to retest it. Can't hold the 50. We're still above the 200 on Meta, so that's good. I do like this as a long-term play. I think they're a great company. They have a great business model. There's not much tariffs that actually do affect it, so that's why when you see these broad-based sell-offs, it's kind of a buy opportunity in my opinion. I don't want to be super bullish and optimistic when you realize that the economy is slowing down and we could be orchestrating like a telegraphed recession. So price action tells all. Stay above 600. You can tell it's a big level. There's a huge bounce from that level. So if we get down to 600, we watch a Meta. If we do lose that, we're at risk of touching that 200-day moving average. Hopefully find a support down there. Amazon's one that looks like it's ready to slingshot soon. I mean, straight down, it's Amazon. It's an awesome company. These are things that, as a long-term investor, I do like to see sell-offs like that, but it just doesn't seem justified. I'm not a huge fan of just having politics control these kind of things, but it happens, and there's nothing I can really do about it. And as a trader, I'm just going to continue to watch the price action and the technicals. Amazon came into this previous all-time high in July, August area. So be watching for that. They did hold it pretty well, and they held their 200 on the weekly. So we'll see if they get a bounce there. If they do start to lose that in the short term, it could start to get ugly because they're right at their 200. So look for these levels, 150, 160 in the longer term. Short term, get above your 200. Literally the 200-day moving average and 200 price point. and you can start to cook a little bit, but you have to identify the downtrend that we are creating a massive downtrend. So anything getting up to the 210 area is going to be resistance. Get above that 215, and then we can start to cook towards the 50 if we get that insane rally. If inflation is really low, it's possible that it does start to send us up more. But Netflix, they started unloading that. And once they're above that, it's just very overstretched to the upside, and they had a major divergence. So divergences worked both ways. You could see, in major time frames, they had a massive divergence going, this to that, and then it's clearly a lower high there, just creating a higher high there, and then boom, the trend changed almost immediately. It doesn't usually change that quickly, but once you do a few taps, then it starts to slow down and stuff like that. QQQ is starting to get smoked this morning. It's down 1.5% now. We'll see. It is Monday. Markets don't usually bottom out on Fridays, as you've heard before, and that's where we've been getting our bounces towards the end of the day. But 42.04 below that could start to get ugly. That's about it. I just wanted to cover it. We did have some nice dip buying on Friday, but it looks like we're still trying to sell it down. I do think the economic news this week will be bullish, just the CPIs. I mean, JOLTS and jobs and unemployment claims, those are probably going to continue to go up. And as those go up, I'm assuming we go down. So ultimately, yes, I do think we continue to go down, and there will be more downside ahead. In the short term, I'm starting to lean a little bit more bullish. Not the technicals are backing me up on that, but just, rubber band effect is like, okay, we've had 3 straight weeks of selling. Usually there's a counter rally at some point, and it just takes one quick catalyst like a CPI, and then boom, you can go up, but it's creating that lower high, and then ultimately sellers find their way and they use it as exit liquidity, and it's just building momentum on the bear side as of right now. So don't be too quick to the trade, but also keep a level head that when you see companies this cheap, continue to accumulate and then work yourself from there. But I appreciate you guys checking in. If you have any questions or comments, please let me know. I hope everyone has a great week. Let's kill it this week, guys.